Hey everyone, welcome back to Tesla Daily. Today is March 7th, 2026. We've got a lot to cover, so let's jump right in. First up, we're looking at Tesla's ambitious financial moves. They're really pushing the envelope here, and it's exciting to see where this could lead us. Next, we'll talk about some innovative breakthroughs in manufacturing. Tesla is always finding new ways to streamline production, and it's fascinating to watch. Then, we'll explore Tesla's future in AI and robotics. This is a game changer for the industry, and we're eager to see how it unfolds. We can't forget about the supercharger expansion plans. More charging stations mean more convenience for all of us, and that's a win-win. Of course, we also need to address the challenges facing Tesla's Robotaxi initiative. It's not all smooth sailing, but we're optimistic about the long-term potential. So, stick around as we dive deeper into each of these topics. There's a lot happening, and we're in for an exciting ride. In a significant leap for vehicle production and manufacturing, Tesla has unveiled two groundbreaking patents that promise to enhance its manufacturing efficiency and product performance. First, Elon Musk confirmed that Tesla's battery production is getting good, following the release of a new patent that addresses a long-standing challenge in battery manufacturing. The new dry electrode process eliminates the need for traditional, energy-intensive drying ovens, allowing Tesla to produce batteries more efficiently and sustainably. This innovation not only reduces the factory footprint, but also lowers energy costs, paving the way for cheaper, faster charging and more energy-dense batteries. The patent, published on March 5, 2026, reveals a machine that uses rollers to create a smooth film from battery materials, avoiding the destructive high-pressure methods of the past. This breakthrough could have far-reaching implications, as it is essential for powering not just electric vehicles, but also advanced humanoid robots and aerospace technologies. In addition to battery advancements, Tesla has patented a one-piece seat design that could debut in its next-generation Roadster. This innovative design simplifies the traditional multi-part seat assembly into a single continuous composite frame, significantly reducing complexity, weight, and manufacturing time. The patent describes how this new seat structure integrates the base, backrest, and hinge into one unified component, enhancing both comfort and performance. As Tesla continues to push the boundaries of automotive manufacturing, these patents reflect its commitment to innovation and efficiency. The one-piece seat design, which incorporates a flexible hinge for reclining, could not only debut in the Roadster, but also be expanded across Tesla's entire vehicle lineup, aligning with the company's broader manufacturing efficiency goals. Overall, these advancements signify Tesla's ongoing evolution in vehicle production, showcasing its ability to integrate cutting-edge technology into its manufacturing processes. As we look to the future, these innovations could position Tesla as a leader not just in electric vehicles, but also in manufacturing excellence, potentially reshaping the automotive industry as we know it. Here's the next update you should know. Tesla is facing significant challenges in the European market, particularly in Germany, where recent sales figures reveal a stark decline. In February 2026, Tesla recorded 2,276 sales, a modest increase from 1,429 in February 2025. But this pales in comparison to the 6,038 sales achieved in February 2024, a staggering 62% drop over 2 years. This trend is concerning, especially as the overall battery electric vehicle (BEV) market in Germany grew by 29% during the same period. Moreover, Tesla's market share in Germany has dwindled to just 4.9%, while the Volkswagen Group dominates with a commanding 41%. The company had previously paused Model Y production to transition to a new version, which likely contributed to the low sales figures in early. Now let's shift to the next story. Tesla is currently navigating a turbulent period characterized by soaring demand for its newly introduced Cybertruck and significant fare hikes for its Robotaxi service. The recent launch of a $59,990 variant of the Cybertruck has generated immense interest, with delivery estimates stretching as far as 2027. This excitement, however, has been overshadowed by policy changes that have left many loyal customers feeling disillusioned. The cheaper Cybertruck variant has attracted a wave of orders, particularly as Tesla announced that customers could no longer transfer their full self-driving FSD package from older vehicles after March 31st. This change created urgency among buyers, many of whom saw the new Cybertruck as their last chance to retain the expensive software. However, the requirement to next up another key development. In an intriguing experiment, a Canadian couple tested the limits of their Tesla Model 3 by sleeping in it overnight in extreme temperatures of -26 Fahrenheit. Using the vehicle's camp mode, they aimed to see if the car could maintain a comfortable environment while conserving battery life. Upon starting with a 73% charge, they were pleasantly surprised to find that after 9.5 hours, the battery level dropped to 35%, demonstrating that the Model 3 can indeed handle extreme cold effectively, provided it starts with a sufficient charge. The cabin remained relatively warm, although the trunk area was noticeably colder. This experiment not only showcases the practical capabilities of Tesla's technology, but also highlights the growing trend of using electric vehicles for blank. Here's the next update you should know. Tesla is making significant strides in its transition from a traditional car manufacturer to a leader in automation and artificial intelligence, AI. This shift is not just about vehicles. It encompasses the development of advanced AI systems and robotics that could revolutionize various sectors. With the recent unveiling of the Optimus humanoid robot, Tesla aims to integrate AI and robotics into everyday life, potentially transforming labor dynamics across industries. In the realm of AI, Tesla's full self-driving FSD technology is at the forefront, with software updates continuously enhancing its capabilities. The company is also developing its custom silicon, such as the AI5 chip, which is designed to optimize the performance of its neural networks. As we move towards a future where AI becomes increasingly integrated into our daily lives, Tesla's advancements in this sector could position it as a leading software-as-a-service (SaaS) provider in the automotive industry. Moreover, Elon Musk has set ambitious goals for SpaceX, aiming for over 1 million tons of payload to be delivered to orbit annually with the Starship rocket. This showcases Musk's vision of a future where both Tesla and SpaceX leverage advanced technologies to push the boundaries of what's possible. 1 million tons a year of payload to orbit is the goal, Musk stated, emphasizing the scale of ambition behind these projects. The integration of robotics into Tesla's manufacturing processes raises questions about labor displacement and the ethical implications of AI. As we embrace these technologies, we must also consider their societal impacts. The potential for robotics to replace human labor in factories could lead to significant shifts in employment patterns, necessitating a reevaluation of workforce training and support systems. In the long term, Tesla's focus on AI and robotics could yield substantial benefits, including increased efficiency and reduced operational costs. However, it also requires careful navigation of regulatory landscapes and public sentiment regarding automation. As we look ahead, the balance between innovation and ethical considerations will be crucial in shaping the future of Tesla and the broader tech landscape. In summary, Tesla's commitment to AI and robotics is poised to redefine not only the automotive industry, but also the way we interact with technology in our daily lives. The path forward will demand both visionary leadership and responsible implementation to harness the full potential of these advancements. Next up, another key development. Tesla is navigating a turbulent phase as it attempts to expand its AI-driven robotaxi service while facing production hurdles with its humanoid robot, Optimus. CEO Elon Musk recently acknowledged on social media that the rollout of the dedicated Cybercab robotaxi has not gained the expected traction, stating, "We are still working through some significant production issues that could prove costly." The Cybercab, envisioned as a low-cost alternative to traditional taxis, is yet to appear in significant numbers on public roads, with the current service in Austin relying primarily on modified Model Y vehicles. Despite these challenges, Tesla is doubling down on its investments, planning to allocate over $20 billion in capital expenditures this year, more than double last year's budget. This funding is aimed at building factories for cybercabs, humanoid robots, and other electric vehicles, reflecting a strong commitment to its long-term vision. However, The company has recently raised the base fare for its Robotaxi service in Austin from $1 to $3.25, significantly increasing costs for short trips. For example, a 2-mile trip now costs $5.25, up from $3, which could deter potential users. This pricing strategy seems to be a move towards a more sustainable model, as the company grapples with long wait times and limited availability of autonomous vehicles. In a broader context, Tesla's energy unit has been valued at approximately $120 billion, with analysts suggesting a potential share value of $31. This segment, which includes utility-scale storage solutions, has seen revenue growth of over 25% last year, highlighting a successful aspect of Tesla's operations amidst its robotaxi struggles. While Tesla's ambitions in the autonomous vehicle sector are commendable, the reality is that competitors like Waymo are already making significant strides, operating over 2,500 commercial robotaxis and averaging around 450,000 paid rides per week. This raises questions about Tesla's ability to keep pace in a rapidly evolving market. In summary, while Tesla is making bold moves in AI and robotics, the current setbacks in its robotaxi and humanoid robot production could hinder its long-term goals. As we look ahead, it is crucial for Tesla to address these challenges effectively to maintain its competitive edge in the electric vehicle and autonomous driving sectors. Now, let's shift to the next story. Tesla Inc. Tesla is at a pivotal moment, grappling with a decline in automotive sales while simultaneously ramping up its ambitions in artificial intelligence and robotics. Recent reports indicate that Tesla's total revenue for Q4 2025 slipped 3% year-over-year to $24.90 billion, marking the third consecutive quarterly decline. This downturn is largely attributed to intensified competition in the electric vehicle EV market, particularly from Chinese manufacturers, and a notable 16% drop in vehicle deliveries to 418,227 units. Despite these challenges, optimism remains among analysts, particularly from Bank of America, which recently upgraded Tesla's stock to a buy rating with a price target of $460. Analyst Alexander Perry emphasized Tesla's leadership in the autonomous driving space, noting that its camera-only approach. Next up, another key development. In a tumultuous period for Tesla, we are witnessing a significant downturn in vehicle sales, alongside ambitious claims from CEO Elon Musk regarding the company's future in artificial intelligence. In 2025, Tesla sold approximately 1.63 million vehicles, marking a 9% decrease from the previous year and the second consecutive year of declining sales. This downturn is compounded by a 3% drop in annual revenue, totaling around $94.8 billion, and a staggering 33% decline in per-share earnings compared to the year before. Meanwhile, competitors like BYD have surged ahead, selling 2.26 million electric vehicles and claiming the global top spot. Musk's recent proclamations about Tesla's potential to achieve artificial general intelligence (AGI) have raised eyebrows. He stated that Tesla would likely— Now let's shift to the next story. Tesla is set to revolutionize electric vehicle charging with plans for the world's largest supercharger station, boasting an impressive 400 V4 stalls in Yermo, California. This ambitious project, part of a commercial development known as Eddy World 2, will unfold in 6 phases, with construction on Phase 1 expected to begin in 2026. The initial phase will deliver 72 V4 supercharger stalls, with subsequent phases progressively adding hundreds more, ultimately eclipsing the current record holder, the 164-stall Project Oasis in Lost Hills, California. Strategically located along the heavily traveled Interstate 15 corridor between Los Angeles and Las Vegas, this new charging hub aims to alleviate congestion during peak travel periods, especially during holidays and major events. Tesla's V4 superchargers are designed for higher charging power and improved compatibility with a wider range of electric vehicles, aligning with the company's broader strategy to open its network to non-Tesla EVs through the North American Charging Standard, NACS. The Yermo supercharger will not only serve as a major charging hub, but will also integrate retail features, including restaurants and convenience services, creating a comprehensive experience for travelers. This project underscores Tesla's commitment to expanding its charging infrastructure, which is crucial as electric vehicle adoption continues to rise. In a related development, Tesla is also phasing out its Model S and Model X vehicles, removing them from its U.S. referral program, which reflects a strategic shift towards optimizing margins and focusing on future models. This move signals the end of an era for these flagship vehicles, with production expected to cease by mid-2026. As we transition to new models, including the highly anticipated Cybertruck, we see a clear focus on high-margin products and the integration of advanced technologies like full self-driving, FSD. As Tesla continues to innovate and expand its offerings, the long-term outlook remains positive. The new supercharger station will significantly enhance the EV charging landscape, while the company's shift in production strategy aims to streamline operations and cater to evolving consumer demands. We are witnessing a pivotal moment in Tesla's journey, as it solidifies its position as a leader in both the automotive and energy sectors. Here's the next update you should know. In a bold move, Elon Musk's vision for X money is gaining traction as it aims to transform the social media platform X into a comprehensive financial ecosystem. This initiative comes as Musk has secured money transmitter licenses in over 40 states and partnered with Visa Inc., signaling a significant shift in the financial landscape. The beta rollout of X Money includes a personalized metal debit card with zero foreign transaction fees, a feature that has already generated buzz among users. Actor William Shatner, who previewed the service, humorously noted, "If I were the poster child of X Money, I'd be up to my eyebrows in Teslas and Starlink stock." The financial implications of this service are profound. According to a report, the U.S. credit card industry generated $148.5 billion from merchant fees in 2024 alone, highlighting the potential for X Money to disrupt traditional payment systems. Meanwhile, the Dogecoin community is encouraging businesses to adopt Doge payments to avoid credit card fees, emphasizing a growing trend towards cryptocurrency adoption. The Dogecoin network has collected $962,000 in transaction fees over the last year, showcasing the increasing interest in alternative payment methods. Musk's broader financial philosophy was also highlighted recently when he stated, "Even if you tax every billionaire in America at 100%, it barely makes a dent in the national debt." This comment underscores the urgency for innovative financial solutions as the national debt continues to rise, currently standing at approximately $38.82 trillion. As we look towards the future, the integration of financial services into social platforms like X could redefine how we manage money and identity. With the potential for stablecoins and digital currencies to gain traction, we may see a significant shift in how value is stored and transferred globally. The implications for Tesla and its stakeholders are substantial, as this venture could position the company not just as an automotive leader, but as a formidable player in the financial technology space. In conclusion, while the road ahead is fraught with challenges, the potential rewards of Musk's ambitious financial initiatives could reshape the industry landscape, making this a pivotal moment for Tesla and its investors. In a significant and distressing development, we report that Lillian Mendoza Brady, a 65-year-old Tesla staffer, has filed a lawsuit against the company alleging gross negligence after she was assaulted by Diaga Diagne, the man later identified as the gunman in a tragic mass shooting in Austin. The incident occurred on December 4th, when Brady claims she was attacked during a sanctioned break at the Tesla factory. According to the lawsuit, Diagne was engaged in prayer in a common area when he allegedly assaulted Brady without provocation. The lawsuit asserts that Tesla had prior knowledge of Diagne's volatile temperament and propensity for aggression, but failed to take necessary precautions to ensure employee safety. Brady is seeking over $1 million in. Here's the next update you should know. In a challenging turn of events, Tesla is facing increased competitive pressures and regulatory changes that could impact its market position. LTD, a key competitor, has applied for a permit to import vehicles into Canada following a tariff agreement that allows for reduced tariffs on over 49,000 EVs from China. This could potentially expand to over 70,000 vehicles in the future, posing a direct challenge to Tesla's sales in the region. The Canadian government has scrapped its EV mandate in favor of revised fuel economy standards, which could benefit Tesla as it continues to sell vehicles imported from its Shanghai facility. However, the return of the IZEV incentive program, offering rebates of up to Canada's $5,000 on qualifying. That wraps up our update for today. Thank you for tuning in to Tesla Daily Insights. We appreciate your support, and we can't wait to catch up with you in our next update. Until then, take care.